All right, what is going on, Future Focus team? Back at it with another video. If this is your first time to the channel, thank you. Welcome. If not, welcome back. The purpose of this channel is to educate and entertain you, but the ultimate goal of this channel is to make you a little bit smarter today in order for you to have a better tomorrow. With all that said, let's get into it. All right, so today I have like a 3-step process we're gonna go through. Try to cover as much we can in this time limit we got. The first thing I'm gonna cover is some misconceptions on dividends. Not things that are like well known to you. I'm not trying to waste your time. I'm just trying to clear up some misconceptions on it. So I'm going to cover that quickly, and I'm going to get through some websites you guys can use to help you with your dividend tracking and doing math. The next thing after that I'm going to cover is a website that I found on MWR page that it deals with the stock market, and I think it's great. So we'll get to that, and then the last thing I'll finish off with is timeliness, like setting up a time limit for investors. For example, if you have a 1 to 3 year time horizon, what you're invested in should be it should be covered in that time horizon. If you have a 5 to 8 year time horizon, there's like things that you should think about that are going to be popping at that time. So we'll get into that. Any questions before we start? All right, so start sharing. Can y'all see my screen? All right.
Yes, sir.
All right, so this one was this big misconception that I saw. Do you guys see the PowerPoint? Can you guys see it?
Yes, sir, we can.
All right, so the ex-dividend date is for stocks is usually set 1 business day before the record date. If you purchase a stock on the ex-dividend date or after, you will not receive the next dividend payment. So this is something I've been hearing, that people had the stock but they didn't receive a payment, and it was because of this, because there's an actual date that is published, and if you read the Q3 forms, the quarterly report, their next dividend will usually be put on there. If not, you got to keep track of the companies that you have for dividends, and there's times that they won't even pay a dividend because they canceled it, they can't afford to during that next quarter. For example, Disney, they weren't able to pay a quarter, so they let their shareholders know, we're not paying a dividend this quarter, so they have to notify you of that. But if you're not paying attention, then you'll never know. There's people that I talked to recently that didn't even know that Disney had suspended their dividend. All right. Another important note to consider: as long as you purchase a stock prior to the ex-dividend date, you can sell the stock on any time or after the ex-dividend and still receive the dividend. All right. I'm gonna show you a visualization of this as we go along. On the ex-dividend date, the share price will drop. And the reason I put this in the PowerPoint was that some people try to buy it, and then after they get the dividend, they try to sell it immediately. But I just want you guys to realize that for whatever your company is giving you a dividend for, the next day, their stock is gonna drop by that much. So this was an example I put on there. Consider a stock with a share price of $50. On the day before going ex-dividend with a $1 dividend to be paid, on the ex-dividend date, the share price will open at $49. So that's something to keep in mind if you're trying to sell it as soon as you get the ex-dividend date is announced. All right, so this is just a visualization of how it all works through here. So I'll just let you take a look at that. But on the announcement date of the dividend, the stock will rise by the amount of the dividend. On the ex-dividend date, the stock drops by the amount of the dividend. The record date is the date right after the ex-dividend date. If you sell before the record date, you won't receive the end of the dividends. So that green area right here, you must own the stock between that time frame in order to receive the dividend. And payment date is the day that dividends are paid out. So all these days are important days to know if you're actually tracking. You want to track when you're going to get your dividend or when that company's going to pay a dividend. But you really want to stay in tune with it, because again, there's times where you might get to the point, maybe 20 years from now, where you're relying on that dividend for your monthly income or for your quarterly income, and the company might cancel it because there's something that happens later on in the future. There you go. So it's always like important to keep tabs on the companies that you keep. This was just another example I put on there. So this is kind of on a different sense. This is something I want you guys to keep in mind, because I don't want you guys to get too much into the percentage that you see of the yield, because the yield is, you could see a 10% yield, but that's not necessarily a positive thing. So this is just an example. So the ex-dividend day is announced, and ticker ABC, a fake stock, their stock is selling for $10 on that day, and their dividend is $1, so 10%, right? So let's say a few days later, that same stock, the stock drops down to $5. The dividend amount will not change. It will still be $1, but you'll see 50%. So if you guys ever wonder like why you see such a huge dividend, that's the reason why. Because when they announced the dividend, their share price was a certain price, but things happen, the stock drops, and the quantity that you're going to get is not going to change. What will change is the percentage, because obviously $1 or $5 is different than $1 from $10. Does that make sense? All right. And then the last one was, if it dropped down to, if the stock went up to $40, your dividend would still be $1 for that quarter, actually for that year as you were, and then it would be that would be 4% instead of the original 10% that you were getting. There you go. So just something else I wanted you guys to keep in mind, because that's another huge misconception. This is another chart I wanted you guys to look at to see the importance of dividends and why it's good to have them in your portfolio, especially in your Roth IRA, because there's caps in your Roth IRA, that $6,000 a year limit. So unless you want to always be selling, it's always good to have residual income that you receive, whether it be monthly, quarterly, or semi-annually. But this is just a chart. It says the amount of increase with a dividend and with no dividend. This is another chart I found. It was large cap companies between 1980 and 2004. And you just see right here that the capital appreciation, it kind of stopped, it has a limit. But when you reinvest those dividends, there's no limit, because they're going to keep growing. And you take those dividends, you reinvest them. It's called a drip. You take those dividends, you reinvest them, and you keep on growing. That's another good chart that I found on there. All right, so any questions with that? We'll come back to that. All right, so this is this right here is a dividend calculator I found. I think it's something you guys can use. It's very simple to use. So you can do it through your whole portfolio by clicking on portfolio here. It will reload, and you could put all the dividend stocks you have in your portfolio, or you can just do an individual stock. A lot of ads on here, but it's something you're getting for free. So a taxable account, you could say, yes, it'll be a taxable account. When is it paid? When is that dividend paid? Are you doing a drip? Like, are you reinvesting it? How many shares you have, the share price. If you're going to continue to contribute to that stock a certain amount per year, how much is that you're going to continue to that individual? What is your tax rate? So you have to do this different for REITs, because they're taxed at a different rate. How much is the yield? The annual expected dividend increase, I put 1, and the expected annual share price appreciation, I put 1%, and I did it for 20 years invested. All right, so you just come down here, and it just has some great info on it, like where you would be after 20 years. So you can start it here. You would start with 2,000 after 20 years in this portfolio, doing everything that you did up here. you would have 38,236 out of this one stock. I just used one stock as an example on here. Then you come down here and it has some extra information. So after 20 years, it shows you a breakdown of every single year. It shows you right here after the drip, how many shares you would own after the drip, and then next year it starts on that quantity. So this is a free tool. That's the website up here, MarketBeat. This is another one that you could, if you wanted to see if you were investing in a stock prior to it that had a dividend, this one you could do historical. So you could go back in time with this one and see if you had invested for a certain amount of time. This is another good tool, but this is like reverse looking at history, not really looking at the future. So that's the website for this one up here. I just Googled it and it was like one of the first 5. Once you get through all the ones that say add, it was one of those that I found. So this is another one. This is on thestreet.com, and this one has a dividend calendar. So if you want to look for X dividend dates when they're going to be paid, you can just come through here, click on a random date. So well, that passed already. Let me click on August 4th. So on August 4th, you have this company right here with this amount, with this percent, and it gives you the X dividend date. So if you want to look for companies that are going to pay dividends, this would be a good way to look at it on a calendar basis. So this is the website here for this one. All right, so Steven brought it up earlier. What's going on, Jesus? Or Jesus? This is a list right here of the dividend aristocrats for 2020. And it's good to scroll down. Like right here, you see the list, but more important than this stuff right here is you could come down here and see the performance versus the S&P 500. A lot of fund managers, a lot of, they're trying to beat the S&P 500. And as you can see right here, the dividend aristocrats have outperformed the S&P 500, and this chart starts at 1989 to 2019. But you can see the difference between the dividend aristocrats compared to the S&P 500. Now, if you look here, it's not always that way. There's going to be times where it's outperformed. But right here, I'm looking at 1999, and I think the reason it outperformed during that period was because of the tech bubble. So if you can see it right there, that's my assumption that the reason it outperformed during that time was the big inflation you saw during the tech bubble. So keep coming down here, some more information on it. And right here, there's also an ETF out there. Spider has one, and I think, what was the other company? There's another company out there that also has a dividend aristocrat ETF, if you guys are into ETFs. But like I was telling Jesus on Friday night, we were talking about it. You can benefit more from building your own. Like if you wanted to build an ETF out of these, you could build your own, not pay a fee, and pocket that extra money, and then just build it out of the companies that you actually want to have in there. Because if I was going to build something out of this, there'd be companies that I probably wouldn't keep on here. Just maybe not because they're not good, but I just don't know what they are. I never heard of them. I don't understand what they are. I don't know who their CEO is. I haven't done enough research on them to feel comfortable putting them into my own individual portfolio that I was creating for dividends. So, Jesus, anything you missed, I'm gonna put this up, and you'll be able to go back and watch the beginning of this. I just talked on some individual things that were misconceptions about dividends and payments and things of that nature. So I'll get rid of this one.
Okay, thank you.
No problem. And this is just another one that I found that those were the aristocrats that we just looked at. These right here are Dividend Kings. This is just 15 of them. Hormel is one. It's usually like your safer bets, but the dividend yields are going to be a lot of the times smaller. A lot of them don't even keep up with inflation. So, or some of them just keep up with inflation. So again, don't even worry about this percentage. Go look at the actual dollar value and then look at if it's paid quarterly, if it's paid monthly, or if it's paid yearly, because that each one of those steps is going to be very different. All right. So I'll pause right here, and that's all I got for dividends for now. Has anybody got any other questions with dividends? He's got a question right here. All right. So he asked, what's the difference between a dividend king and a dividend aristocrat? So a dividend aristocrat are companies that have paid a dividend for 25 years and also increased their dividend for consecutive 25 years at least, at a minimum. Now a dividend king is 50 years. So half a century of continual nonstop paying dividends, but also increasing their dividend. Good to go. But that increase could be something as small as 0.01%. You know, it doesn't have to be a huge increase, but even through the recession, even through like the .com bubble, like they've paid dividends nonstop through all of that time. So these aren't companies that you're going to have if you have a portfolio that's based on growth. This is something you have that's based on more like a safety net and something that's going to pay you, like give you money back every so often. Does that answer your question? It does. All right. Anything else? Any other questions? All right. So getting back into it, this is a website that I found the other day. We were looking for books off the Commandant's reading list, but I stumbled upon this. So this is the website right here. Again, if you miss it, I'm gonna put the video up. You'll be able to catch it later on. But I just wanted to walk you from the very beginning of it to make it easier for you. So you click on login. You have to have, I'm gonna unplug this real quick. You're gonna need to have a CAT card reader and also your military ID in order to log on to this and create an account. So I pulled it out, so it's gonna stop. But so once you log, you could come down here, common access card, log in. Now, once you're in here, what I did was I came down to business and finance. And then I found this website right here. It's called Morningstar. So there's a few other ones down here. So if you want to go and look through other ones, these are all going to be free to you. So click on that. It gives you a little warning, letting you know that whatever happens outside of this website is not on them. But you go through. Let it load. And this was a great resource. We were just messing around with it the other day, but like the amount of information that it gives you on here is insane. So especially since like the big thing about it to me was that there's no cost. So you're getting all this information at no cost. So we did Disney the other day. We did Tesla. We did, I think, AT&T. So we could go through like AT&T as an example on this. And I just want you to see the amount of information that you could get from this page at no cost. So let it load. Hopefully it don't take as long for you guys when you guys are doing it. All right, so just starting right here from the very top. All these tabs, you could skip to things, like go straight to the bottom and skip to them. But every stock that I've looked for has been on here. So there's even some speculative stocks that are going to appear on here. And if you guys have an example of one you want to look at, we can. Or any stock you would like to look at, we can do it real quick. I'm just using AT&T, but just go through here. This is like the kind of information you're going to find in pretty much anywhere. But as you keep coming down, you find a full analysis. You know, you can read through that. We've talked about moat before, having an economic moat. I think it even has, let me see. Maybe they have their own definition over here. All right. We're not watching the video, but having a moat is just basically a safety net around that company that protects it from other competitors to get into the amount of money that they're collecting. So their profit, there are other companies that are going to cut into their profit. So their strategy and outlook, you know, this is like a kind of forward-thinking segment right there. It tells you what the economic moat can be if the company has one. If it doesn't, then it'll say it doesn't have one. So you keep scrolling down, like it's so much info. But the most important part is once you get to the bottom and you get to the financials. So right here, they're giving you what they feel is fair value for this stock. So currently they feel that fair value for this stock is $37 a share. And obviously currently is $30.25 a share. You can see the trailing returns. It shows you a valuation, which is very important. Let you guys take a look at it. If you want me to slow down, if you want to look at something, you can. You know, I'm not going to waste too much time because, again, this was just a random stock that I picked. But if you guys want to pick a certain stock and we can look at it, we can do that real quick. You can look at the PE and see what it was from 2013 to current. See how much has changed. This is very important right here. The return on assets, equity, and the return on invested capital. That's a big section right there. We were talking about dividends earlier. You could go back and look at their history. So 2010, 11, 12. You could look at the splits, like the ratio. This is if they've done a stock split. So in 1998, they did a 2-to-1 stock split. In 1993, they did a 2-to-1. And 1987, they did a 3-to-1 split. But again, great amount of information on here. This is important as well. Like if you have a stock and you don't know who these people are, like most of them, especially if you're looking at big companies and companies that are established, usually when you come and look at who their CEO is probably somebody that even if they just got to the company, they've been around in a while. So they have a resume. So you're like, if you're going to really invest in a company, you want to take this serious, like you should know who these people are and what they're about, because you want to invest in a company with the same, it's like picking it, whether you want to be a Democrat or a Republican. Like you're going to pick the party that shares the same values as you. So you want the same thing whenever you're investing in a company. You want that company to have the same values as you. And when that is the case, it makes it a smaller percentage that that company will end up doing something unethical or something that will end up putting the amount that company costs in jeopardy. If you don't really know what the company is about and you are interested in it, like you could go on the company's website and look at testimonials and things like that, but this just gives you a brief description of what the company is, what they do. You can see the amount of employees as of March 30th, when their fiscal year ends, which is important. I got to go back up and look, but I think this has like documents as well, like their quarterly reports. but this was their most recent earnings, was on March 31st. They're about to release earnings next week as well. Let's see. I'm just looking here to see if they had their documents. I think it's right here, view report archive. Yeah, so you can come here and see like reports that the companies put out, but that's, again, anybody want me to look at anything specific on here? Y'all good? All right, another thing you guys could do on here, again, free, keyword, is you could create a portfolio here and you could x-ray it. By x-ray, it means like take a really deep look in there. So let me see. I'm gonna see if I could do one real quick. We'll do a dollar value. So we'll say 1,500. This is all fake. Just trying to show you an example of it. You just click on show instant x-ray, and I don't think I got to show you this the other day, but you can take a deeper look into your portfolio. So another thing you could do is add cash. Like if you had cash on the side, it would include it in here as well. But it shows you, based on the valuation, how much of your the companies you have are value, what percentage is growth. You can include your whole portfolio on there. You can add more tabs than we originally saw. So how much is high yield in there? You get right here, it shows the sector. So you can see what sectors you're hitting or not hitting, which is important for diversification purposes. Another cool thing was down here, it shows you your global reach. All right, we're running out of time. You got 10 minutes left. It shows you your global reach, how much of the globe you're hitting. So in this portfolio, we're just hitting the Americas. So we're not diversifying ourselves fully. And right here is a little more specific, just North America. Prospective earnings, like this is all fake, so I won't take too much time, but I just wanted to show you guys how much is you guys can get on here for free. And there's more tabs we didn't even cover. Any questions on this? There's also other tabs you guys can hit, and it'll give you information on those. But if you did it, I would include your cash position on it to get the most accurate look on it. All right, so I'm gonna get out of this. All right, so can you guys see it? All right. All right, so what I did here was I just try to put some kind of departments to look at. If you guys, depending on what your horizon is, and it don't have to, like, this is not perfect. This is just something I literally did. It took me like 10 minutes. You guys can adjust it based on how you guys feel about it. But what I did was, like, if you had a 1 to 5 year time horizon, what you should be looking for during that horizon. All right, so what I did was I chose 5G, semiconductors, copper. This was through conversations with him back there. Getting into developed markets, fintech, which is financial technology. I put that twice. and healthcare. So these were just off the top of my head. In the first 1 to 5, the next 5 years, these would be like the biggest things that we would be looking at. So next was if you had a 5 to 8 year outlook, obviously these would still be important, but in the next 5 to 8 years, I felt these would be important. The EV market, China, emerging markets, and silver. And can you see what I'm looking at here, or is it showing you something else? All right. So the last one, 8 to 15 year outlook, what I chose on here was travel. I feel by then travel would get, to where it's at. I don't think it's really going to get there. Like the travel stocks that everybody's trying to get, I really don't think it's going to get there back to where it was or beat it in the next, 8 years. So I think after that, we'll get back to where we were. So I put travel on here, gold, and I also put space. So anything having to do with space technology, satellites, space defense, those were things that I put on here. So the last thing I found was a stock. I want you guys to take a look at this. This was something based on the percentage that you had in stocks. And this was just for diversification, including like through conversations with him back here, having gold, having copper, having commodities like that are outside of stocks are equally important. And this is just a chart of what's happened during downturns when the blue line right here is when you've been 100% in stock. This is what's happened during that time frame. When you were 100% in stocks, like these people here, they witnessed a 50% decrease of their overall portfolio. Down here, they were about 30% of the portfolio. So all it's trying to show you here in this chart is as you lessen the amount you have of your portfolio fully in stocks, how much safer you are. But we have a few minutes left. Y'all have any questions? This is your time to ask anything that might be on your mind. It don't have to be with what we talked about today. This guy back here, he's worked on Wall Street. Like if y'all have questions, you guys can ask him as well. You got anything you want to say? 5 minutes left.
Gents, I think you have an amazing teacher. He did a good job. He covered a lot of major topics. I hope this is not boring to you guys. It's very, very exciting to me. For you guys planning to have a future family or I don't know, whatever endeavors you may have outside of Marine Corps, but it takes money to have these things, right? Dividends are a good way to start building wealth. Overall, I thought it was a great job. My favorite thing of the talk today was the morning store. Those are some of the things that we have available to us. But I feel like you gents, you guys should ask a lot more questions so we can get more out of it, and let me know like what interests you guys, so we could probably relate in terms of what your knowledge base and explain how dividends may be incorporated. So for example, some people on the chat here are homeowners. So dividends versus rent, they're two peas of the same pot. Very, very similar in nature, right? You buy the house first, you buy the stock first. Then from the house, hopefully you get rent. And from the stock, hopefully you get a dividend. So same thing, and almost to the point where when you look at the ratios, they kind of represent each other. They're very similar by nature. So just ask questions. A lot of your favorite clothes, Nike in particular, dividends, right? I always think about the Jordans. That's where my mind goes. And then I had to stop and say, hey, with everybody buying Jordans, there has to be money in it for me. Maybe not necessarily in a sneaker resale, but buying the stock itself. I'm not sure if Nike is a dividend aristocrat. I'm not 100% sure. If they're not, they're pretty close to it. So a lot of your favorite things, you'll be surprised. It may offer a dividend. That's all I have.
All right, if y'all don't got nothing for me, I ain't got nothing for y'all. Once again, don't forget to like, comment, subscribe to the video, to the chat. And don't forget, you are part of the Future Focus team.